Welcome to the deep dive. Today, we're zeroing in entirely on IonQ. They're the world's first publicly listed pure-play quantum computing company.
That's right.
And for you, the investor listening, our mission is really to cut through the noise. Look at their unique ion trap tech, their financials, and, well, the pretty significant risks tied to their future plans.
Yeah, it's a really interesting case because they're fundamentally the ion trap challenger, sort of the outsider taking on these big superconducting players.
Right.
IonQ itself, founded 2015, but the actual science, the tech, it goes way back, like experiments in 1995. They got that big initial funding boost, going public through a SPAC back in 2021.
Okay, let's dig into that tech difference then, because betting everything on ion traps.
Yeah.
Why is that potentially such a game changer? What's the core idea?
Well, fundamentally, it really boils down to, I'd say, quality and connection. Ion trap systems just inherently give you the industry's longest coherence time.
Meaning the qubits stay stable and usable for longer.
Exactly. They stay quantum for longer before noise messes things up. Plus, and this is huge, they have the only all-to-all connection architecture out there right now.
All-to-all. So any qubit can talk directly to any other qubit.
Precisely. Think about the efficiency gain there. You cut out a lot of the complex sort of data shuffling steps that other architectures like superconducting ones have to deal with. It makes running complex algorithms much more straightforward.
Okay, and this ties into the physical hardware too, right?
Yeah.
Because this is where it really kind of hits home for practicality. They operate at room temperature.
Yes. That's a massive difference. Competitors need these huge, complex cryogenic setups, extreme cold, IonQ systems. They're basically the size of a commercial fridge, run at room temp, lower power consumption. Forget the giant cold bunkers.
That's the big practical advantage.
And they're building out their product line based on that quality edge. Right now, the flagship is Forte. That's got 36 fully connected algorithmic qubits.
Let's clarify that. That's not just the raw number, right?
No, exactly. It's the usable power. It factors in error correction, connectivity. It's a much better measure of what the machine can actually do for real-world problems. And the next big step is tempo, planned for 2026.
Right.
That's targeting 100 of those algorithmic qubits, aiming for 99.9% fidelity. And they're switching the core material to barium ions to help get there.
And looking commercially, IonQ seems to have built a bit of a moat already. They're the only quantum company available across all three big cloud platforms, AWS, Azure, and Google Cloud.
Simultaneously, yeah. That's a key advantage for reaching customers, absolutely. It makes their systems accessible.
Okay, so the tech sounds aggressive. The market position is interesting.
Yeah.
What about the financials? You mentioned high risk, high reward.
Definitely. The numbers reflect that strategy perfectly. So first half of 2025, they brought in $28.26 million in revenue. That's up almost 50% year over year, which is strong growth.
Pretty good clip.
The net loss ballooned, expanded pretty dramatically to $209 million.
Wow, okay. A $209 million loss against $28 million revenue. That sounds stark. You mentioned they did a big financing round in 2025, raised $1 billion. They have about $1.6 billion in cash now.
That's right. Roughly $1.6 billion in cash and investments.
But how long can that runway actually last with losses like that?
Well, see, that loss is, you could argue, intentional. It's driven by massive R&D spending. In that same period, their strategic R&D spend was $143 million.
Okay.
That's up 125% year over year. So yes, they're burning cash, but it's a deliberate, massive investment in pushing the technology forward. And crucially, they have zero long-term debt.
Okay.
So that huge cash pile, combined with no debt, gives them the financial muscle, the runway to sustain this really intensive R&D burn rate while they race to scale up. It's their bet.
A very expensive bet, but they have the cash for now. So speaking of scaling, let's look at that roadmap. It seems incredibly ambitious.
It really is.
Short term, they're talking about a 256 qubit system by 2026, using tech from Oxford Ionics.
Yeah, integrating the Oxford Ionics tech is a key part of that next step. And then longer term, well, the numbers get huge. They're aiming for over 2 million physical qubits by 2030.
2 million physical, convertible to what, 80,000 logical qubits?
That's the target, 80,000 logical qubits. Logical qubits being the error-corrected, truly powerful ones you need for complex computation.
That 2030 goal sounds almost science fiction, given where the field is today, especially when you look at market share.
Right. I mean, IonQ currently holds maybe 15% of the market. They're still significantly behind IBM and Google, who dominate with their superconducting approach, like 35% and 30% market share, respectively.
So that brings us squarely to the core risk, doesn't it? Scalability.
Exactly. It's the fundamental challenge for the ion trap route. Can you actually control, reliably, thousands or eventually millions of individual ions? Can you move them around precisely? That's called ion shuttling between different zones on a chip without introducing errors.
That's the big unknown.
That's the billion-dollar question, really. Delivering on those 2027 and especially that 2030 target, that remains the single biggest uncertainty for IonQ.
Okay, so let's synthesize this for the investor listening. What's the core trade-off here?
Well, you've got IonQ offering arguably a leading technological edge in qubit quality, fidelity, coherence, that all-to-all connectivity. And it's backed by this huge ore chest, immense liquidity.
A high-quality qubit bed.
Right. But that strength is directly countered by these massive scalability hurdles inherent to their chosen path, the ion trap path. And they're up against fierce competition from the established players using a different, currently more scaled technology.
So what's the key thing to watch in the near term? What's the next big test?
I think the immediate catalyst, the thing you really need to watch, is that integration of Oxford Ionics and the planned deployment of their AQ64 system in early 2026. But maybe even more fundamentally, think about the impact if IonQ actually hits their first major logical qubit milestone. If they successfully demonstrate, say, 12 fault-tolerant logical qubits, maybe on a 2D chip architecture as they've discussed.
Right, if they actually prove that step is achievable.
If they clear that hurdle, it essentially validates their whole aggressive roadmap. It proves the ion trap scaling path might actually work as they envision, and that would fundamentally change the entire quantum investment landscape. It's a huge if, but that's the potential pivot point investors should be watching for.